January is shaping up to be absolutely critical in the markets, and we need to be looking at it. I'm going to share some information with you in this video. I am Dr. Stock, Doctor of Education, and do you suppose that when kangaroos work out, they wear jumpsuits? We're going to look at the indices and provide commentary on the markets and why January is going to be so absolutely critical and what to watch for, the different catalysts that we have in the market, and the way the market might react to the approach and the results of those catalysts. And then I also want to talk about big tech, because I think that big tech is also a big part of what exactly we're going to see moving on from here through January into the very beginning. February 1st is actually a really important date, so is January 31st. All right, so if you guys want to see how I'm playing this market, I'll tell you later about the Patreon, about my options course, and then also about how you can up your technical analysis trading game. In the meantime, I want to get first to the economic catalyst dates that we have coming up. We have a ton of Fed speeches this week that we want to be watching for. So as a matter of fact, today at 11 a.m., maybe you watch this in time, maybe to be after that, there's one of our first Fed speeches. And then when we go to Wednesday, you can see that we have 3 more Fed speeches, Barr, Bowman, and Woods, all around that 9 o'clock hour. That it would be during the pre-market hours. And then we hear from Williams at 3 p.m. So that Fed talk coming out is possibly going to indicate what we're going to hear as a result of the Fed meeting coming up on January the 31st. And I'll get to that soon. I still want to go down through here. Fed Bostic Thursday, 7:30 a.m. and then 8:30 a.m. Initial jobless claims. We want to be watching for that. A softening number here. So an increase in these numbers that you see, if we start to hit 220, 230, 250, numbers like that, the market can actually rally off of that, because that's going to alleviate some of that stress on that higher for longer narrative that we've been hearing from the Fed. Even though they have come off as dovish during their last meeting, this still the next meeting coming up. What we want now is that color commentary coming in on what exactly we can expect for that first rate cut to come along. Are we seeing it in March? Are we seeing it in June? We have to find out. So moving on from there, Friday, Michigan consumer sentiment at 10 a.m. That is also going to be big for us. We want to check out and see what exactly is going on with that sentiment, not only what we have for inflation, but also current conditions in the market. So we want to see what we have going on with the Michigan consumer sentiment. That's going to be big for us. So you have all those different numbers that you have here about the current conditions, about inflation expectations for current, and then also the 5-year inflation expectations. We want to see those start to come down. So Friday, 10 a.m., we want to be watching for that. And then the following week, let me bring this up here. I'm going to scroll all the way to Friday, because this is actually one of the next really big ones that we have. This is the last inflation report that we get prior to the Fed meeting, and that has to come out excellent for us. We want extra low numbers, but we don't want to see strongly negative numbers come there. And I don't think anybody expects strongly negative numbers to be popping out of there where it's going to signal deflation, but it is one that we don't want the numbers to come in hot as they are. If we come in well above consensus, that could be something that could really upset the markets. And honestly, I will tell you that with the Fed meeting coming up, which is January 30th and 31st, with the results of that coming out at 2 p.m. on the 31st, and Jerome Powell speaking at 2:30, the market, I think, is going to start sweating the end of January, right around the inflation report, and then certainly that following week leading up to the Fed coming out and speaking. And then we have tons of big tech earnings. January the 31st in the after hours, I think we have Microsoft, and then February 1st, we have a ton of others. I'll show that when I get to the charts in just a moment. But I think that the market could possibly start to draw down near that PCE report that we get on Friday with personal income and outlays. We also want to be watching personal spending with that, for example. And then the inflation report through PCE itself, need to be watching those. Absolutely critical that we watch those inflation reports as they come out, because that's the last indication that the Fed is going to get from those inflation reports prior to their meeting on the 30th. And then big tech, the formations that they're making on the technical charts lead me to believe that there's possibly a sell coming up for big tech, which can start to drag the market with it. As a matter of fact, Apple this morning also moving on that. So with that said, let me just bring up the charts on here. So bring that down, pop the charts up. So what we're looking at first is SPY, and I said that this little triangle is what we'd be operating in. We got rejected twice off of resistance, and now in the pre-market hours, we're currently down below where we closed at on Friday. As a matter of fact, down where we closed at on Thursday as well, where we closed at on Wednesday. So we would be watching for that to see exactly where we go. And if we start to test, let me stretch this out a little bit for you. If we start to test the bottom of this trend line right here, because we are in a rising wedge pattern, if we break out through the bottom of that, that could be something where we'd see more of a significant sell-off with the S&P, and then we go over to QQQ tracking the NASDAQ 100. This is also going to be highly impacted from what we get out of big tech. Apple being a big player in that and not doing so hot in the pre-market hours. That's probably a lot of what we're seeing right here already. Now, mind you, we're not up at resistance. We are also not down here at support. We have a fair way to go before we get down there. We could honestly lose like 1% to 1.5% before we start to come down and test out this support line that we have right here for the trend line. So this is where we're operating. We want to break to the upside on that, and we're going to have to watch and see. We don't actually have an intersection on this until going out to January the 31st. It'd actually be neat to watch that confluence play out. I don't know if it will or not. Break to the upside on this is bullish, breaking down through support, bearish, and we need to be watching for it. So Apple in the pre-market hours, due to troubles with their watches and probably even more so trouble with demand or suspected trouble with demand for Apple is likely what's dragging them down in the pre-market hours, currently trading at 183, where it closed at about 186, just shy of 186 on Friday. We want to be watching for a retest of support on this 200-day, and I mentioned this in my options video that I put out yesterday over at the Patreon, that right here we tested out the 200, and then we have right here the 50 SMA that we're looking at. If we put the EMAs up just for a quick moment, this red line that you see here is the 50 EMA reacting to more strongly to more recent price action that you have. We're actually testing that out as resistance. So we have a little bit of mixed signals right now between bearishness and bullishness down below the 50, short-term bearishness, and then up above the 200, it's still bullish. But if we come down and retest that support, we could possibly break through it. And then we have this long-term trend line here in purple going across the screen that we also want to be watching for. We break down through that, we could have more of a significant sell for Apple. What's the rest of big tech doing? By the way, Apple's earnings, before I move on, February the 1st, as per what we see here on TradingView, and those would be in the after hours given by this little moon logo that you see right here. So if we go over to Microsoft, they're actually at the top of the rising wedge pattern. It's possible today that we actually see a peekaboo through the top. It's also possible, given that we're getting to the overbought territory on the daily charts for Microsoft, that we even start to maybe even retrace a little bit. We're going to have to watch and see what happens. But right now, Microsoft, whose market cap has currently exceeded what Apple's is, this is one right now that could be getting favor from the market. So we're going to be watching for that, for potential break to the upside on this one, that maybe instead of following the rising wedge pattern and we break down through support, maybe it's possible to pop up through resistance up here, and then we have this as support instead of resistance, and we could ride on that for a little while longer. So we're going to have to see for Microsoft. Their earnings, by the way, are January the 31st in the after hours, so be watching for that. Moving over to NVIDIA, they are also at the top of their formation. You'll notice a pattern happening here with Microsoft, with NVIDIA. Apple's kind of fallen from that for right now, that they're not at the top, but Microsoft and NVIDIA are. NVIDIA also rocking right around that 550 level. Be careful, because we could possibly get rejected again at 550. If we make it up above 550, we get it as support, but I think there's some of that round number bias that could go in with that as well. And we are also in the overbought territory for NVIDIA, and I do think that in NVIDIA's future, we have a retest of 500 coming up before we ever see 600. So we're going to have to watch and see that. The market would have to rally pretty hard to show us 600 this early, but I do think so that sometime in 2024 that it is possible that NVIDIA not only reaches but exceeds that $600 level. And if you want to see more about my information on that, over at the Patreon, I have my NVIDIA stock price prediction and earnings projection from last quarter, and I'll be updating it very soon for this quarter. And as a matter of fact, I'm doing that in the month of January. That way, when February rolls around, that we actually have updated information and we know what to plan on, especially if we retrace back to that 500 level. Should that be something that we go long on, or is it something that we should be shorting over? We're going to have to look and see. But like I said, that Patreon, the link is down in the description for it. Also, my Tesla stock price prediction and earnings projection is also over there. And my options course you'll also find over there. And then also my Discord, where I post my buys and sells, also through the Patreon. That link is down in the description. Come on over and join us. Absolutely love to have you. And if you want to do technical analysis like I do, learn how to benefit from the markets like I do, there is also a technical analysis trading course that has lots of benefits that go along with it. Not only do you get videos, practice testing, lifetime access, and then also Discord access. This is a separate Discord. This is a learning community where people are there to help and support each other, and they absolutely do. Stockmo's over there. It is his Discord. I am also over there. You can chat with us. You can chat with the other community members. There are also live teaching sessions. I believe that occurs weekly, and so go ahead and check that out. There's a link down in the description for that. And if you would like to receive a massive discount on that, this one's huge, and I'm told it's the biggest one yet. That coupon code is TRADE trade. There was an issue with the software yesterday. With that going through, that has been resolved. So if you tried yesterday and didn't work, try again today, TRADE, and you should be good to go. With that coupon code, come on over and join us. It is a clean, concise, and I can tell you as a doctor of education, it is really well constructed and easy to follow. And I do have a chapter in there on options. All right, let me bring that back down. We're going to put the charts back up. There we go. So with what we have on the charts for NVIDIA, you can see they're at the top of their formation. So it would be natural to retrace from that. We have down here, this purple line going across your screen is about 505. And down below that is where we find the bottom of the bullish channel that NVIDIA is currently operating in, where we could possibly see that 500 come out of that. And I think that we'd find some decent support as long as there's not a broader market sell-off, which is going to affect all of these stocks trading multiples. I think that we could bounce and then we could have some more bullish action coming from NVIDIA. Breaking down below that would be bearish for us, but I think it'd be something that'd be short term, and that I remain a long-term investor for NVIDIA because I do believe I've done the homework on it. And I can tell you that NVIDIA is something that I very much strongly believe in, especially as the infrastructure play in the AI space, and that people, the companies, cannot get enough of the hardware from NVIDIA. Moving on from there into Meta. Meta also at the top of its formation, also in the overbought territory. We've got to be watching for that. It is possible that we retrace and test the bottom of this. If we do break through the top, we have 385, which actually right here, this is 384.33. This is the top where we have over there. And look at that confluence that we have with the formation, with the rising wedge pattern. It's possible that we come up, we check out 384, 385, and then we start to sell off from there. And then how much will we sell off? Well, maybe we start to see like 350 kick out of there again. Earnings for Meta, by the way, once again, February 1st, that's going to be a huge day. February 2nd is going to be a very interesting day based on what we see from the big tech earnings. And then moving over to Google, they have come up, tested the top of their rising wedge formation. And then from there, they've actually sold back off down to this support off this top that we have right here, right around 144, 145. And in the pre-market, they're right around 143. So we're going to be watching for these for possible bearish reversals. If we break down through support and break out of this formation, that could be a significant short opportunity for us. If we break through the top on them, then that's possible that we go long for a little while longer. Amazon's an interesting one because for this one, there's actually a pretty large inverse head and shoulders pattern with the neckline going right across this support line that you see right here. And we've actually broken up above it, came down and retested, and now we're heading back up. And the pre-market hours not so strong, but should we continue back up above there, it is possible we break to the top of this trend line and we start to experience some of these prices more that are up here. Now, mind you, should we fail to break that trend line, then it's looking like we're coming back down this way, and that rising wedge formation is going to overrule what we see through the inverse head and shoulders pattern that's happening on Amazon. And remember what you saw with the rest of big tech. If the rest of big tech goes that way, Amazon could likely be drug along with it. Amazon's earnings, by the way, if I click on the right thing, Amazon's earnings are coming up also February 1st in the after hours, so be watching for that. And then finally, Tesla right now, pre-market hours right around 215. We have shorted this over in the Discord. I put my play out there, and I know that other people who like to follow Tesla and they do their homework on this and their due diligence. I never tell you what to buy or sell, but I do know that some other people also decided that they were going to go short on this, and that has paid off very handsomely. Today should open very well. It should be a good day for that short position for Tesla. We got to be careful because we are near support. We are near the bottom of the trend line, and it is possible that we could bounce from where we're at right now. It is also possible that we draw down running up to earnings, or leading up to earnings, which, by the way, are next week on the 24th of January, Wednesday, after the market closes. That's going to be a critical day for Tesla stock. There could be a lot of big movement going there in either direction. It'd be really nice to see us come down to this 200 level prior to earnings. And the more that we draw down to earnings, the easier it is to be bullish in the near term on Tesla stock. So I am long-term bullish on Tesla. In the near term, in the short term, I will play that volatility along with options to amplify the power of my portfolio. And please remember that you absolutely can too by using that link down in the description. Find out more about options by signing up for my Patreon, get access to that options course, also my buys and sells, also that Discord community. Go ahead and check it out. Now, along with that community, I do want to give a quick shout out to my man Adolfo. So if you're watching this, back on the 6th of January, he said, hey, bad news for Boeing. Do you think it's a good short position coming up? And I said we could most definitely see some bigger bad news coming out of this, and it could possibly go short. So I'm hoping that he he played his cards well on this one and took advantage of that short opportunity on the 8th of January, because you can see what happened. And in the pre-market hours, we're all the way down at 212. And so that means that he had an opportunity on a day where the closing price was 229 to be $17 down from that. So kudos to Adolfo for calling that out. And there's lots of other stocks that are being talked about over in that Discord. We'd absolutely love to see you over there. All right, guys, I better wrap this thing up. So like I said, Tesla stock price prediction, earnings projection, that is available now over at the Patreon. If you want to see it leading up to Tesla earnings, go ahead and snag that link down in the description. My options course is also over there. And then also you can see my buys and sells available through the Discord. And if you want to learn to do technical analysis like I do and really up your trading game, that link for learning about technical analysis and using it to help you trade better, that link is also down in the description. Make sure that you use coupon code TRADE. It is available only for a limited time. It will go away, and then we will not see the price that's available for now ever again. So make sure that you take advantage of that. All right, guys, I'm going to wrap this up. Thanks again. I really do appreciate it. As always, thank you for watching. I am Dr. Stock, Doctor of Education. Remember, my friends, that learning is earning, and we'll see you in the next video.